Hello, my name is Tahir. I'm a founder of Realty Coffee Talk. Realty Coffee Talk is all about creating connectivity to increase awareness, building consumer confidence, and promote good ethics and business practices. This is our fifth Global Connected Conference on LinkedIn for LinkedIn partners. And it's a great honor to welcome you all today. And we will have our guest speaker, Peter German, Chief Operation Officer, partner with Access Capital Advisors Inc., EMD Exam Market Dealer. He will have a presentation of wealth creation through intelligent investment and wealth management. Also, he will talk about AP Capital Mortgage Investment Corporation. Without wasting time, we're going to ask him to present. And after this presentation, we're going to have a Q&A session, and then we will have a networking. We will talk to each other, introduce each other, how we can help and cooperate with each other. So I'm going to share my screen, Peter, so you can do the presentation. Ladies and gentlemen, Peter German. Open your mic, Mike. Okay.
Thanks very much, Tahir and Ken, for this invitation, and thank you for the opportunity to be a part of things this morning. Wanted to give you an understanding of some of the things that we're doing on a day-to-day basis that I think really do fit, I would say, with what are some of the fundamentals of real estate investing. And long story short, a large part of what we do in our day-to-day, of course, whether in the real estate sector as real estate professionals or in the investment side as investment professionals, is look at ways to protect our clients, look at ways to ensure that they get the best possible service, look at ways to ensure that they have the opportunity to create some very significant growth in whatever asset classes they're participating in. And so what I wanted to talk to you today about is a little bit about Access Capital and who we are and some of the things that we're doing as a firm, and also to give you an understanding of some of the investments that are a part of our world that merge that area of real estate with investment performance. And from our perspective, real estate is one of the best asset classes out there. And it's often available through what we call the private capital market. Many traditional investment advisors are very familiar with REITs and with various mortgage lending offerings. We have those and definitely focus our attention on those that are outperforming others in the market. Much like any fund manager, our focus is to look at assets that aren't correlated to the public market. We're big fans of real estate, of course, but one of the biggest concerns investors have is, where does the market go from here? Is it going to be up, down, a lot of volatility? Will it be flat? From our perspective, we can't really tell that, and that's not something that we're focused on. Instead, our focus is on being prepared and having really an all-weather approach to investing. And to do that, we get into the private market. And for us, that basically puts us in a position where we're looking at private asset managers to see where they put their capital. Now, I'm going to mention right out of the gate, this is an information presentation. We're not asking you to buy a security. This is not a solicitation for investment. Any investment that you may consider or do in the private capital market should be through the auspices of an exempt market dealer or broker dealer that's licensed for those activities. And you should speak with and work with a dealing representative licensed or registered in your province of residence. Basically, there's a lot of messages out there, though, isn't there? Back to basics. I want yield. Let's get debt free. Let's save more. At the same time, people are looking at how to be more opportunistic, how to find opportunities out there. And as I said, a lot of the trends are excessive volatility, a lot of up and down in the market, As well, people are concerned about some of the systematic costs that they see hitting their portfolio and why isn't my portfolio performing? And often that comes down to the fact there's a lack of alignment between investors and investment managers. Many of us are really restricted to just public stocks, or we look primarily at mutual funds and maybe some ETFs, but we have no system or no advisor that helps us get directly into the real estate side. And a lot of times people don't know how to do that so that they're protected. Well, this is where Access Capital Advisors comes in. As a dealership, we've been around for over 20 years in the private capital market. Tahir and Ken on this call are both licensed with our firm, and we select some of the best private capital investments in the market. When I say best, of course, that's a qualitative comment, but what we mean is we're looking for those funds that have a track record, that have transparency, and have management alignment. Then we turn around and we talk to our client about what's in their best interest. What's their focus as an investor? What are their objectives? And we start to look at their risk profile, their time horizon, and what would be a good fit. So today I'm going to talk about or highlight one of the products that is on our shelf that's been a long time approved debt issuance in the market, and that uses a very special structure to allow you to invest in Canadian mortgages. We call this company a MIC, a mortgage investment company, because it uses a specific tax structure in the Canadian market that allows us to flow through all of the yield from Canadian mortgages to investors that hold shares. The company we're going to talk about is AP Capital, and it is a mortgage investment company. And again, they have their disclaimers. You cannot invest without using a dealing representative and working with an actual exempt market dealer to do that. Well, let's take a step back for a second and talk about the Canadian real estate market and real estate lenders. What we see out in the market is that most of the residential mortgages are with the chartered banks. Many of you, this is part of your business. When you're working with investment advisors or you're working with doctors and dentists who are buying a property, any of your clients, of course, they're going to try to qualify at a chartered bank. But maybe things are structured a little differently and they have their own company and they're an employee. Then they might use a non-bank lender or even a mortgage investment corporation. These companies have the same focus as a bank does. They're looking for generating a target return to the investor, and they're looking to achieve that through offering a one-year mortgage to a borrower on Canadian property. You see, there's a bit of a space left in the market right now. Banks have very restrictive terms and only offer mortgages to a certain caliber of investor. From our perspective, MICs fill in a real gap here because they allow other investors, perhaps business owners, individuals who have their own specific business practice, or perhaps they have a number of rental properties, and they look for this alternative lender that'll provide them an acceptable mortgage on a one-year term. The result of that is an opportunity for us as investors, for individual investors, to participate in something like AP Capital. AP Capital has a track record of 136 consecutive months making distributions of over 6%. With over 1,300 shareholders, they've been very active in the market, and they've been providing a great solution to people who need a mortgage and to clients who want to invest in mortgages. If you think about it, there's a lot of changes at bank rates that we've seen over the last few years. We've seen the Bank of Canada recently decrease its rates in the last year. And although it may increase them in the future, some of these have created some of the lowest market rates available. Alternative lenders like a MIC, like AP Capital, lend their money out at a little higher rate. Because individuals are not qualifying at a bank, they'll pay a little bit higher for 4.5% to 12% as a mortgage payment on an annual basis. Sometimes this is a way to pull out equity out of their home for a specific purchase. Sometimes it might be a refi to do renovations. Perhaps it's an acquisition they have in view for a family member or even a rental property. But the security for that loan is always real estate. And it's always single detached homes with AP Capital. They don't get into unique or high-end properties. They're not into land banking. They're not looking at a speculative development with an apartment or a condo. They're not doing construction. And as a result, we have a very strong security profile for a company like AP Capital because all of them are typically owner-occupied, single detached homes in urban markets. Urban markets are where Canadians like to live. They are our fastest moving markets, our highest performance markets, and where you can easily liquidate an asset. So if you are going to lend money and you lend it to a property that's in one of those markets, you have arguably the safest property to secure that loan. Now, on each of these, AP Capital works just like any other MIC. They do an independent appraisal. They do a complete review of the environmental and what's in the local environment. And they have a loan to value threshold, which we'll touch on in a few minutes. They look at that borrower and they ask about their income, their credit, their net worth, and what they're doing as a business or an employment. Often they'll find that, yes, there could be a financial situation that has made it difficult to secure a mortgage from a chartered bank, but they still look to see that payment profile and payment history. As a result, the portfolio that AP Capital has put together has a lot in common with what you would see from a mortgage lender from a chartered bank. There are 243 mortgages. 91% of those are in BC. 97% of those are in residential single detached homes at an average mortgage of $530,000. Here's the statistic I like to see the most in a mortgage portfolio: loan to value. What this lowest number is, 55.4%, means that the mortgage fund is exposed on average to only 55% of the property value. That is, if the property value dropped 30 or even 40%, we would still have complete coverage of the mortgage. Now, from our perspective, that provides a good margin of safety and gives us an understanding of how this management team is putting assets in a safe place for our investors. Take a look at this $1 million home. $1 million is now a pretty standard home value in our larger urban markets like Montreal, Toronto, Vancouver, and even in Edmonton and Calgary, we're creeping up as we see higher net worth families in single family homes. 60% loan to value would mean that 60% of the equity of that home, or $600,000, is borrowed. What it means from our perspective as investors and homeowners is that, hey, we own $400,000 in equity. We can feel pretty good about that. If the market declines, you're going to see pricing change. And let's say that the pricing goes down by 15%. That $1 million home is now worth $850,000. But did the value of the mortgage change? No, it did not. It stays at $600,000 because it was an amount borrowed from a bank. As a result, when we look at this as an investment, being in a debt position, being in the first position as a first lender on a specific single detached home is where we need to be. That's where we can achieve some security and settle in at specific rates of return. Now, no investment is complete without talking about risks. There are risks. We could see a rapid decline in property values. We should note these portfolios are not insured with CMHC or Genworth. There is a likely increase in the borrower risk, and there can be a business risk here too, because we are working with a private company, albeit a company with over 100 million in assets. The result of all of this, though, is that over the last 10 years, 11 years actually at this point, we've seen audited returns of 6.8% per annum. And the average 10-year return was 8.6% per annum. So for a lot of us as individual investors, when we look at the markets, we see the ups and downs. When we look at a private equity investment, we often see outsized returns and we're promised double digits. And we look at that, but we all know that comes with a fair bit of risk, either from volatility, the market's going up and down, or from a private company not actually achieving its investment objectives. When we're looking at a MIC, we're looking at a company that sets its rates in advance, that takes security over real property, single detached homes, and as a result, actively manages a portfolio in that 6 to 10% range, paying month in, month out. Now, from our perspective, that leads to some pretty exciting performance available through Access Capital Advisors. By talking to somebody like Ken or Tahir, you can talk to them about what it would look like to invest in AP Capital MIC. Since 2008, their performance has been really quite exceptional, and it has actually beat the S&P composite total return over that time frame. 100,000 invested in 2008 would be worth almost 3 times that today. Does that seem crazy? Should not. When you sit back and think about it and do the math, it really comes down to investing and seeing a steady return, 7, 8, 9% year in, year out. Now, corporately, we look at a dealer at those people who are operating it. We look at the mortgage management team. We look at their investor relations team. We look at their independent advisory and their bank oversight. One of the things that we often look for is whether a bank will lend money to AP Capital. And in this case, it's RBC that does. They do a quarterly site visit and field exam, and they lend to AP Capital as long as the money will be deployed in a mortgage like the mortgages you've heard about today. AP Capital has a lot of fund partners or professional partners, M&P, Computershare, SGGG Fund Services in Toronto, and it is on the shelf and approved at numerous RSP custodians, so you can use your RSPs or TFSAs to invest. Access Capital Advisors has effectively approved the offering for 2021, and every year we look at the audited financials, review the oversight and team that are operating at AP Capital, review the returns, and review the portfolio, and then assess whether we will approve it again on our shelf. And to date, that has been a success 7 years in a row, where every single time we've reviewed it, we found that they've either met the same key performances indicators they have for us, or they've beat them and improved upon their record. It doesn't mean that the rate of return will stay the same. We know that at historically low interest rates, we are seeing lower mortgage rates. And as a result, investors are seeing a lower overall yield, just around 6%. But as rates climb again in the next year to 2 years and going forward, we anticipate seeing those rates increase because there is always a premium for private lenders. I hope this has given you a bit of an understanding of Access Capital and how we're focused on achieving results that are in the client's best interest. I hope you understand that from our presentation, it's not a solicitation, this is information, but there's a lot more information available through dealing representatives that work with our team, from Tahir and Ken, who work with Access Capital and have access to all of these types of offerings. And I hope that you'll consider it as you look at your particular investment opportunities and consider what might be your investment objectives, your risk profile, and your time horizon for investing in something like AP Capital. That's all I have for you this morning. Tahir, happy to take any questions or comments about Access or about AP Capital.
Oh, Tahir, you're on mute.
So I request all friends to open up their video and mic to speak and ask questions. And just for a disclosure, my name is Tahir Qureshi. I'm a registered dealing rep with Access Capital Advisors, Inc. So is Ken Finch is also dealing rep with Access Capital Advisors. So if you have any question, please feel free to ask, open your mic. Ken, do you have any questions?
No, well, just in regards to the returns, do you have a breakdown for the last 10 years? Maybe that you can share with us.
You know what, Ken, I actually don't. I currently don't have the year by year. It has ranged, though, I can tell you, from a high of around 9% 10 years ago, generally trending in the 8 to 9% range up until about 3 years ago. Then we saw a fairly significant drop in rates around the world, really, and bank rates specifically in Canada. That resulted in some downward pressure on lenders in the market, and mortgage lenders to compete have gone as low as 1.9, 1.7, even 1.6% at the chartered bank level. When you look at the alternative lenders, of course, they follow that trend downwards. The result has been that we've seen rates more in the 6 to 7% range over the last 3 years.
Peter, I have a couple of questions. One is regarding distribution. What is distribution? Can you explain us? And number
Sure.
two, the distribution and also how it impacted taxes for investors.
Certainly. There's a couple or three things we should mention there. Distributions for most mortgage investment companies are paid monthly, and they're paid to wherever you invested from. So if you used your open or non-registered account at a bank, those distributions can be paid directly back to that account. If you use an RSP account, distributions will be paid to the RSP. And similarly, if you used a TFSA or even an RESP or LIRA, locked-in retirement account, any of those accounts can be utilized. The shares of AP Capital are registered plan eligible, and you will receive the income back to your originating account. There is another option for investors, and that's called DRIP, or Dividend Reinvestment Program. Many funds and asset managers use this to provide investors a way to reinvest every month. Often they'll sell the shares of the MIC at a slight discount, maybe 1 or 2%. It gives you a slightly better return because you're picking up another 2% per year over the 6.8, and you're converting that distribution into shares in the MIC, which in turn build on your distributions. This is a way of compounding your investment return, and it's a way to get a higher than a listed, I guess, return to the investment account. It'll generally add a point and a bit, but we'd need to do a calculation to see how much of an improvement that would make. With respect to taxation, MICs are a flow-through corporation. I'm glad you mentioned it, Tahir, because we did talk about that at the beginning. A MIC is a special type of offering in that it has a specific yield or return, and it really only is allowed to keep a specific amount in the MIC for operations and fees. What this means is a significant amount of income coming from the mortgage, the bulk of the income is going right to the shareholder, which is great. That's what we're looking for. But it does mean that it's characterized as interest income or regular income, depending on what investment vehicle you're using. So if you want to shelter it and get the best possible after-tax impact, you probably would be interested in using a registered plan, being an RSP, TFSA, LIRA, RESP, or any of the other registered plan variants. If you receive that income right back to you as an individual, it will add to your income for the year. But again, that's kind of goes without saying for any dividend income you receive from any company. it would fall in that same tax category.
Peter, I have one more question, is that how do you process the due diligence when you are putting a product or offering memorandum on the shelf for the DR? So for viewers to have understanding that how the private capital market works, so you do a lot of scrutiny, review, and due diligence. Could you explain to our viewers?
Certainly. So under the regulations for dealers in the exempt market and frankly, also in the public market, there are requirements. To keep your license, you have to have what's called a know your product review. And typically this means that you must review the offering memorandum and approve it as an exempt market dealer for the dealing representatives or wealth advisors to be able to sell it in the market or bring it to their investment clients. For us, this breaks down into a fairly detailed process. We will do security checks and credit checks on the principals. Because if we have a concern, for example, that perhaps one of the presidents or fund managers or asset managers has not paid their visa and is in a debt recovery or foreclosure, that could influence their decisions in their day-to-day work. And it could actually result in them trying to increase fees or take more money away from investors. The same way we look at their financial statements and we look for any big changes in expenses or any significant changes or declines in yield. By looking at financial statements, you can determine a lot about a company. And one of the advantages in our market has been what's called the audit requirement. The audit requirement means that companies pull their financial statements together. They do their accounting and bookkeeping on a monthly and quarterly basis. And then those documents and working papers and all our financial records are provided to an outside advisor or an outside auditor. These audit firms are typically quite well known. They'll typically be a top 10 auditor across Canada, like Myers Norris Penny, or perhaps KPMG or PricewaterhouseCoopers, big accounting firms that are really quite experienced in seeing what's happening inside a company by reviewing the financial statements, cash balances, and asset charts for that company. We then receive those audited financial statements and they become part of our review at Access Capital. Our investment review committee looks at the financials, looks at the principals and the individuals who are actively operating the company, and looks at the previous year's history or track record. Based on that, we'll either approve or decline that offering for the next year. And we kind of then allow it out to the market. Now, it doesn't end there. Each of the dealing representatives that are licensed with Access also have to prepare, and they also have to know that product. So they will read the offering memorandum and financial statements and any marketing materials provided by the issuer. And they have to attend training where the asset manager for AP Capital MIC actually talks about what they do. And they get to ask questions directly to the asset manager. This provides a really kind of a double-barreled approach to due diligence in that the dealer, of course, is looking at it and theoretically has access to ask questions, but so do the dealing advisors, the dealing representatives, people like myself and Ken and Tahir that are on this call. We actually meet and talk to the asset manager at AP Capital once or twice a year to get their updates and market outlook. From an investor standpoint, you have access as well. One of the things that why we called Access Capital, is that we wanted that to be a very transparent line of sight for our investors, so that if they have a question and they want to talk about the specific investment conditions that exist for AP Capital MIC, they can reach out to anybody on this call, to Access head office, or even on appointment to the asset manager at AP Capital MIC. It's through that process of know your product and review of audited financial statements that we're able to select companies that have multi-year track records, good management alignment, and positive track records, paying 6 to 10% return.
Oh, Tahir, you're on mute.
I have one more question. What is the minimum and maximum investment amount for with AP capital and duration of the investment?
That's a great question to hear. The minimum is typically $5,000. There is no maximum per se because the fund is so large that there's no concern that any significant investor could kind of tip the priorities or manipulate the fund. So there's really a functional minimum, but not really a maximum. We suggest investors look at this as a 4 to 5 year placement because there is what we call a deferred sales charge or a redemption penalty if you want to withdraw your funds in the first 4 years. How this works is, as you can imagine, any dealer or advisor is paid a commission. And so when an investor buys shares in AP Capital MIC, a small percentage goes to Access Capital advisors and to our dealer team. That amount is paid by AP Capital. It does not come off of the top of your investment in a functional way. If you invest $10,000, you will see $10,000 on your account balance. As an investor, though, of course, companies have to pay that commission from somewhere, and they anticipate a 4 year period where the money will be placed with AP. And so if you leave earlier than that, they will reduce your amount by 4 or 5% in the first year. I'm sorry, I don't have the exact numbers with me, 2 or 3% in the next year, and I think 1% in the third or fourth year. For those exact details, certainly send a quick email to Tahir or Ken, and they will forward you the offering memorandum that has the specific redemption penalties if you want to leave the investment early. That said, there should be no reason to be too concerned about that. If in the first year you've returned 6.8% and you have a 5% penalty, a bit of a negative there because you've only actually netted 1.8%. But in the second year, you really start to catch up. And in the third year, you're well above a profitable position in most cases. So that's something to keep in mind. Also, partial redemptions are possible. If someone were to invest $40,000 or $50,000 and it was suitable for them and they were eligible to invest, they could place that capital. And if later they found they needed $5,000 or $10,000 or $15,000, perhaps to pay for a family member's tuition or a cottage roof or to assist someone in their retirement, that would be fine. You could make that redemption request, of course, knowing that there will be a small penalty for redeeming before the 4 year mark.
Thank you very much, Peter. Really appreciate your time and effort. Viewers, me and Ken has put together videos about the exam market dealer. What are the eligible or accredited investors, so you understand what is required to qualify as eligible investor or accredited investors, and learn about Access Capital. Also talk about the role of a DR, dealing representative. So you can watch those videos on YouTube, Vimeo, WMII, or you will see the link on a page, Vimeo link page on Access Capital at LinkedIn. So those videos will help you to understand, because I understand that this is a little bit short time to explain. It's very complex, but it's very simple as well. The important thing is understanding the product. There is an obligation on us to know our product. We need to know our product. And we also have a responsibility to know your client. So we need to understand their ability to make sure a product that's being offered by Access Capital is suitable for them to invest. And for more detailed discussions, if you have any questions, you can reach out to Ken Finch or myself. And you have the contact information on YouTube, LinkedIn, Facebook, and the social media. And we will be sharing with you our website once it's approved by our CCO. And we continue to have a conversation. Now, I'm going to take opportunity to ask each one of you to introduce yourself and open up your video so we can record your face and your message and tell us about you. This is a part of networking. So I'm going to start with Abhishek Sword. Could you please open your video and mic? Also, I ask Harpriya, Gail, and Shiraz to open your mic and video, if you could, please. And speak, please. Introduce yourself. Harpriya? So at this moment, I think we don't have any questions at this moment. We're going to just to mention here that if you are you want to become a referral partner with Access Capital Inc., there is a mechanism in which you can be paid referral fee. Maybe Peter, you can tell us how the referral fee works. So our viewers who will watch the video, most likely it's a working day, maybe people are busy. Once they read and watch our video, they will know that if they do not invest, but they make a referral to us and sign and become a referral partner with the Access Capital, they may be compensated and how it can be compensated.
Certainly, I'll touch on that. Referral networks, of course, are a founding part of most people's business, whether formal or informal. Getting a referral is one of the best compliments anyone can receive. And we look, of course, to our clients and our contacts to provide them some framework as to how that can be done. In the securities industry, selling investments is a licensed activity. It's a requirement that you be registered with a securities commission in your province of residence. And so all of our advisors are registered in their home province and can work with investors in that region. If you are interested in the investment, I think that's the first part of this. It's to sit down with Tahir or Ken and talk to them about your particular investment objectives through a Know Your Client process. If you are a professional or have other contacts that you think would be benefited by the services at Access Capital, and you believe that that's an opportunity that others would like to take a look at, you can refer them, of course, to Tahir or to Ken, and they can work with that individual in the same capacity. Also doing a KYC, looking at if they're eligible to invest in the private market, and talking to them about some of the investment objectives they may have. In that process, it is common to have a referral agreement, and all referral fees are paid through a licensed or registered dealer to the individual who makes that referral. So I'd invite you to have that discussion with Tahir or with Ken. It is a standard process where if you are referring clients regularly to Access Capital through one of our registered dealing representatives, you can receive a referral fee for those clients. It is a disclosed fee. We do not sort of leave that off the paper or do it sideways. It's very clear that that's part of it. And we disclose that to the client so that they know that the referral is to a registered dealing representative who will help them in the process. It's important that they know that, and it's important that any individuals who consider referring don't attempt to do things such as knowing your client or talking about investments, because unless you're registered, you actually can fall under some rules by the Securities Commission that actually preclude you doing that. We don't encourage people to talk about investments. We encourage people to make a referral to a registered dealing representative. If you have any questions about that or concerns, by all means, reach out to Tahir and Ken and discuss that further, and they can walk you through some of those steps.
One more question before we end our program. It is about this particular AP Capital make. Is this investment needs to be made by a Canadian resident?
It does. Most of the offerings that we work with are designed around investing in the Canadian environment, and our national instrument for raising capital under an offering memorandum is for Canadian residents. That said, we do have a number of clients who have perhaps retired abroad or may carry dual residency and in dual citizenship. And in those cases, it is certainly possible to still invest. On a somewhat step-by-step process, we'd encourage you, if you are from out of the country and you're reviewing this, again, to reach out to Tahir and Ken and give your particular situation, and we could consider whether there's eligibility to invest or not.
Wonderful. Thank you very much, Peter, for your guidance and clarity in terms of exempt market dealership, wealth management, and how intelligently you can invest to create wealth. Most important thing is to create wealth and to manage the wealth. And this is a great instrument to use and to learn more about it, because very specific security, private capital. So that means you have to have a knowledge. Me and Ken, we both are dealing representative registered with the Security Commission through Access Capital Advisor Inc. Therefore, we can speak to you. You can make a referral to us. We can talk to you about how you can be compensated for referring a business to us and investing with the Access Capital Advisors. We are going to end our program, and thank you all participants. Our next meeting will be at 1 p.m. on Tuesday, December 21st, 2021 at 1 p.m. And for now, until we meet again, thank you very much for watching. This video will be uploaded on Realty Coffee Talk YouTube channel and share on all our LinkedIn social media network. So if you have to reach out to me or to Ken, information will be included in the package. Please do contact us. Thank you very much, Peter, Ken, Harpia, Shiraz. Thank you very much, and see you next Tuesday on our conference, which will be our 6th conference on global connectivity. Thank you. Bye for now.
Thank you. Have a great day, everyone.
Bye-bye.
Bye-bye.